Trump vows to impose 25% tariffs on all products in Canada and Mexico. How is this going to impact Canadian investors? We're going to talk about that today, and we're going to give you two sectors to possibly avoid, and we're also going to take a look at the loonie. Let's get started. Let's start off with the major sectors that will be impacted by tariffs coming out of the United States. Starting with energy. The chart's pretty clear here, isn't it? That's our single biggest export to the United States, followed closely by the auto sector. In fact, 97% of our Canadian oil and gas products are sent to the United States. So the United States is a big customer for our oil and gas sectors. Now keep in mind that President Trump recently did note that he prefers to keep the agreement for oil and gas exports to the United States in place. In other words, he has actually stated that he's in favor of Canadian oil and gas. So that possibly leads a potential of the tariffs that Trump has threatened on Canadian products and services to be lower or possibly forgiven, but that's to be seen. And I won't make any speculation on that. Adding more pain to the potential pain imposed by possible tariffs coming out of the United States on our oil and gas sector are emission and production caps imposed by our very own government. This, without question, would put additional pressure on Canadian oil and gas profitability. Let's take a look at the most followed Canadian energy producers ETF, the iShares XEG units. Now, what I want to show you here on this chart is that the oil and gas producers have been bumping along at a level that technical people like me called resistance. And that means that this is the point where shareholders begin to sell their shares. Well, we're right there. We've had a little bit of a rally on the producers, and here we are, we're facing that technical resistance level. So my thoughts are that we could see a pullback based on potential tariffs and these new caps that have been imposed by the Canadian government. Keep this in mind when comparing Canadian producers to oil and gas producers elsewhere in the world, including the United States. Also impacted by Trump's tariffs are the Canadian auto producers. You may recall that's our second biggest export to the United States. In fact, Canada provides 16% of all autos consumed by the American public, which I found astounding when I learned that. So this is another really important export for Canada. And when we look at producers, the first stock that comes to mind is Magna. Now, for those of you who are not familiar with Magna, Magna is a major automotive parts supplier. They're also involved in the production side of things. They often receive cars from, for example, the Ford plant and install things like mirrors and other components within the cars. So this is a very important company when it comes to Canadian exports. And these guys will no doubt be under the gun with Trump's tariffs. We can see that Magna has in fact been struggling lately. If we look at the chart, we can see that overall it's been in a downtrend. It based for a while and broke down. It's attempting to break out of that base, and my question is, with these new potential tariffs being applied to the automotive industry, how will Magna do? It's a question, it's not a statement, but these are things that you and I, as investors, have to keep on our radar screens. The final thing I want to talk about is the Canadian dollar and how tariffs may impact our dollar. But first, I want to look at some stuff that has been impacting the Canadian dollar for several years now. You may be aware that Canada's employment figures are not as good as those in the United States. That alone has added some pressure to the Canadian dollar. On top of that, some of the basic economics factors that we look at when we're looking at both the economy and the dollar include productivity. Canada actually has the lowest productivity in the G7. We also have the lowest GDP growth and GDP per capita in the G7 and the highest debt per capita in the G7. So Canada has gotten itself into a bit of a pickle when it comes to our economic strength. We're also very high up in the tax brackets. We have the second highest income tax bracket and one of the highest capital gains taxes in the world. All of these factors pressure companies within our economy. I want to bring up a quote that David Rosenberg recently made, which is that if Canada wants to fix its economy, it needs to focus on the rising delinquency, default, and bankruptcy by small Canadian businesses across the country. Final thing we're going to do is take a look at the Canadian dollar chart. Now, you guys know, if you follow my blogs, that I was suggesting more than a year ago, in fact, as far back as March of 2023, that the Canadian dollar was going to be under pressure for the coming years. And that was because of those factors we just talked about, the economic factors that impact the dollar. And now we've got the potential of new tariffs being imposed by the United States. Well, as they say, the straw that broke the camel's back, we've seen a break of 72 cents support on the chart. So let's take a look. I've been talking about this for a year, and I said that if 72 cents breaks, we're going to see the old lows that were seen in both 2015 and 2020 around 68 cents. And it very much seems like we're on our way down to that level. As you can see, we're at around 71 and change right now, and I very much believe that there's a pretty good potential that we will see 68 cents on the dollar. Thanks for watching, and be sure to subscribe to my blog at valuetrend.ca. That blog has been around for some 20 years and offers some of the best investment insights that you'll find on the market. Thanks for watching.